Welcome to Raising Funds from Family Offices. I'm Lori Bishop, the Associate Director for Alumni Programs and Engagement at the Rock Center for Entrepreneurship at Harvard Business School. We're so thrilled about our program today and very grateful to Stacey Boyd, who's an HBS alum and Rock Center Entrepreneur in Residence, who has curated this exceptional group of women with diverse perspectives on the topic to share their knowledge and experiences with us today. As you can see, the session will be recorded. And for our agenda, Stacey will facilitate a robust panel discussion. Then we will open it up to Q&A from our attendees somewhere around 12:45. So be sure to put your questions in the chat. First, a few words about the Rock Center and some of our upcoming other events. We are the front door for entrepreneurship at Harvard Business School, and we leverage the school's robust research and teaching agenda, vibrant ecosystem, and diverse global network to support and facilitate the entrepreneurial journey, enabling students and alumni to launch, build, and invest in high growth ventures. We are just one part of a larger ecosystem and collaborate with other organizations at HBS, across Harvard, and beyond. We have a variety of programs and resources to support both students and alumni, as well as opportunities for alumni to volunteer. Our student-focused team provides numerous workshops and programs throughout the year, including the Student New Venture Competition, Demo Day, Rock Summer Fellows Program, and Founders Forums, to name a few. For alumni, in addition to virtual sessions like this one, we manage a robust EIR, Venture Capital Advisor, and Lawyer in Residence program to support student entrepreneurs, in addition to our advisors for alumni through our REAP program. We also host our annual Alumni New Venture Competition with alumni relations and clubs around the world, and started a Rock on the Road program with events out where our alumni live and work. We'll be at South by Southwest in Austin this weekend, co-hosting an event on March 10th with the Harvard Innovation Labs and Harvard Business School Clubs of Austin. So if you're there, please check out that event and be sure to join us. We head to Miami Beach for April 23rd and then New York on June 6th, just to name a few. But please join us and register for our Alumni New Venture Competition finale, which will be held virtually on March 21st from 12 to 1:30 p.m. Eastern Time using HBS's live online classroom. Check out our website or reach out directly if you have any questions on the Rock Center. And be sure to follow the Rock Center for Entrepreneurship on LinkedIn. We're close to our 1,000 follower mark, so help us get there. So let's move on to our program today. I'd like to share some fun facts about our moderator, Stacey Boyd. She is a Rock Center entrepreneur in residence, as mentioned, and a serial entrepreneur with successful exits and having raised funds from venture, private equity, and also family offices. In building Olivela, her latest startup, there's been an outsized impact on business growth as a result of the family office diversification in their source of capital, especially as they expand globally. So I'll hand the mic over to Stacey.
Thank you, Lori. Thank you, esteemed panelists, for joining, and thank you, HBS alumni and students. It's really terrific to be talking about something near and dear to my heart that I think is really shifting and moving in a very different direction globally. I am thrilled that we have the group of women on the panel we do today that really give us a very broad global perspective on what's happening in the family office landscape. So before we jump into the questions, I'd love to do just a very brief introduction to each of the panelists. And then we have 5 questions that we'll walk through, and we'll really walk through them by region. And then we'll leave, as Lori mentioned, 15 to 20 minutes at the end for any questions that you might have. But if you have questions along the way, please enter them into chat. Lori will be gathering them and consolidating them, and we'll be running the last 15 minutes of the program. So the first panelist that I would like to introduce you to is Cristina Acosta. Cristina has 25 years of wealth management experience in Latin America. Her roots are in private banking. She was both JP Morgan, and UBS. And she moved into private wealth management, working with both Crescendo Asset Management as well as Cardea, and has a new exciting endeavor, which she will be announcing shortly. Again, her focus is really in the Latin American region, as is the focus of Sandra Sainz, who heads up Sonen Capital's private investment strategy. She has 25 years experience as both an investor in the VC experience and as a banker. She's been named one of the top 50 women leaders in Miami by WAA, and is also the member of a select group of top women investing in Latin American tech, named by the Latin America VC Association. So Cristina and Sandra will give us great perspective on the Latin American region. Kimberly Gire is based in Sydney, Australia. A special thank you to Kimberly. It is 4 a.m. her time, and she looks like that she's had more than her first cup of coffee. She is amazing. She originally hails from the US. She has experience, quite frankly, with family offices globally. Her career in banking and in the senior finance executive sector expands extensively, particularly with respect to the international capital markets with Citibank. More recently, she's turned to philanthropy. She heads up the Global Women's Leadership Philanthropy Forum, as well as she chairs the Center for Global Equity out of Cambridge, among about 10 other things, which we just don't have time to talk about. Her resume is long and vast, and she knows family offices very well. And then our last panelist, but not least, Elissar and I are both in Dubai right now. London is usually home for me, but I am in Dubai, although in a different building than Elissar is right now. Elissar is quite something. She has 3 decades of banking experience and has extensive experience in the Middle East. In fact, her most recent post was managing the entire MENA region of Citibank with about $2 billion in business across 12 different countries. So you have just a wealth of experience from an extremely qualified group of panelists to give us some good insight into the family office space. So in order to start the conversation, I'd just like to frame what family offices have become. And I know that they've become that for me at Olivela. Olivela, for those of you who don't know, is a luxury retailer with doing good built into the core. We started a few years ago with about 12 brands and 200 SKUs. We've grown to a company with several hundred brands. We have about 300 million in inventory under management. And our growth has been fueled a lot through support of family offices. I really do believe that family offices are becoming a fourth option for entrepreneurs, in addition to the typical VC, private equity, and ultimately going public market route. For both seed and for growth capital, which I think has shifted, though I look forward to hearing what our panelists have to say. So why don't we start, Sandra, with you? Might you share a bit about how the family office environment, specifically in the LATAM region, has shifted and grown in recent years?
Sure. Thank you, Stacey, and a pleasure to be here sharing this panel with all these wonderful ladies and gentlemen who's there. So I'm Sandra Sainz. I'm managing director for Sonen Capital. Sonen Capital is an asset management that is specialized in impact. This means that we are trying to put more capital into the world's most pressing challenges, both from the social and the environmental perspectives. However, all my life I have been either in the impact space, so that is, I would say, my specialty. From the VC world and also from a DFI, I worked many years at the World Bank. So I have been in the region working in investment in different sectors, and what I have appreciated is how the ecosystem has evolved. Not only for family offices, but in general. No, the LATAM region is a region that definitely has a lot of challenges in terms of social and wealth, equity, or equality among the population. So it faces strong challenges, But the good news is that the industry for investments have evolved in an important manner. And this includes, of course, the family offices who are nowadays more public in terms of what their strategies are for impact. And what I may say is also that these family offices are usually look to align their portfolio of investments to the values of the families. So it is important to understand that the families and the companies founded by families generate in Latin America between the 70 and 80% of the GDP of the region. So it is very, very important to highlight the economic impact that the family companies have in the region. Therefore, the families' offices have an important, significant amount of wealth to invest. And what they are looking for is to have diversified portfolios in different types of asset classes, but each time more aligned to the values of the family. So that is what I would say in general about the evolution of the family offices in the region, in LATAM.
Super helpful, Sandra. Cristina, you're also in the LATAM region. Anything to add to what Sandra has to say there?
I would say that having been in the industry now for 27 years, I have seen clearly, working with private families, I have seen how it has grown from, being allocated 2 to 3% in alternative assets. I don't think the word alternative assets existed back in 1999 or 2000, where most families in Latin America have very, very small exposure to what we call private equity. I believe that some of them had probably an exposure of 5 to 6%, that today family offices have about 40% exposed to alternative assets, of which about 50% or 19%, according to the latest Global Family Office report by UBS. They have exposure of 19% to private equity, of which that 50% is direct investing. And 50% of that, which is about 9%, so 50% of that is about 5%, is focused on venture capital. So that has progressed over the last 10 years. We did not see much venture capital investing, especially direct capital investing into small companies, as much as we're seeing now. And that is because family offices in Latin America have professionalized quite a bit in the last 23 years. And that has allowed them to become more sophisticated with the guidance of a lot of organizations and schools and banks that are dedicated to this endeavor. And that has allowed them to open their portfolio or ideas to be a little bit more, to look for opportunities that otherwise were not available to them 20 years ago. Another aspect of how family offices have evolved is also that the next gen has become a lot more sophisticated. So next gen has obviously been attending a lot of courses, have been attending a lot of events and so forth, and they're much more involved in this future economy. So the type of ideas that they bring to the family board and they bring to the investment committees are much broader. And so that has actually allowed them to become a lot more sophisticated and professionalized. So we're in a good space. I think it keeps increasing. And we will probably see where direct investments in venture capital is probably going to go more towards the 20% eventually as more technology evolves.
Very interesting. Elissar, might I ask you to pick up there and what you're seeing similarly? I mean, I think about Dubai and what Dubai was just a few decades ago versus what Dubai is today. I would just love to hear your perspective on how family offices have evolved.
Yeah, and I mean, considering I'll be talking a little bit more beyond just Dubai, Stacey, to give a flavor in terms of the wealth and how that has evolved. And if we take the space about 30, 40 years ago. So no doubt there's always been significant wealth and deep pockets in the region. But whilst about 30 years ago, when I started my career, it was very much on, speaking to principals and for them to build that trust. So it was very much kind of like an individual decision with the patriarch to make decisions to invest or not. And there had to be the trust developed. Today, you see very sophisticated setups in terms of hiring professional investment team and chief investment officers and what have you. So the region has caught up with professionalizing their setups and the way they look at investments in terms of their asset allocation. And I do share the same view as Sandra in terms of the value investment and what is aligned with their values. And as you can imagine from this part of the world, there are many specific maybe industries that they wouldn't touch. So this also comes into play, irrespective of what asset class it is. But the space of the family office has evolved tremendously. And one thing that we've started seeing in the region, it's not only family office emanating from wealth from the region, but also attracting international family offices moving into the region. And so two of the offshore jurisdictions that we have in the United Arab Emirates, the DIFC and ADGM, have come up with family office laws and regulations to set up with very attractive terms. And post-COVID or during COVID, I would say, as the country managed the pandemic actually quite well in terms of reopening its economy and market, we've seen a number of European also family offices come into setting up in the UAE, and I would say the region at large. So it has evolved, and there's a lot of deep pockets. Sophistication is there, and they do hire the best of best out there in terms of setting up their strategies. And I also add to Christina's point in terms of the impact of the next generation and the level of education of the next generation and what they bring in terms of ideas. Let alone, and the third thing that is influencing also family offices is also what the governments in the region are supporting. So the startup ecosystem is very much supported, and we have technology hub. We have actually also hubs that support the startup ecosystem, funds being allocated to the startup ecosystem. And so that is encouraging family offices to follow suit and support what the government also is supporting. So a very exciting space, and we do see a lot of international investors coming in, as they've done always in the past. And the space of alternative investments is at the forefront now. The allocation has increased. And there's much more appetite to the startup ideas or opportunities. But maybe a bit later, we'll talk about at what stage that they would consider them.
Excellent. Thank you, Elissar. Really thoughtful answer. Kimberly, I know you have a number of regions of the world that you can speak to, but we'd love to hear your perspective on this one.
Sure. I'll focus a little bit on Australia because I think a lot of times people don't know a lot about the market, but it's actually quite a sophisticated market. And I'd probably put it into 4 different categories. We have legacy family offices that are, some of the original big investment houses, property, retail, who are now on their sort of, it could be 4th, 5th generation. And a lot of those have moved into a multi-family office environment. So they are consolidating their investment sort of research, and they're quite, at the more traditional end, I would say, still interested in this space. I recently sat next to one of the principals at a private dinner who was fascinated in the impact space, but really hadn't, lent into that at this stage. But the next gen of that generation, as some of my panelists have talked about, are very interested in this. And you still have a little bit of growth and tension between the different generations of the family in terms of the younger generation really being hands-on, often setting up their own ventures. We have groups of people who have pooled their resources on the more impact and philanthropy space, investing in very small entrepreneurs in the climate and environment space that they're very passionate about. So that's sort of a barbell of where those, older family offices, older money sits in this region. But then you have a category, and I'd be interested if you see this in the US and other regions, of kind of self-made coming out of 2 sectors. One is tech. So some of the early tech people, Microsoft, others, other tech entrepreneurs, and we have kind of outsized entrepreneurs in that space, even though we're sort of down at the other end of the world, who have really gone and pushed investment in some of the tech that's come out. So Canva is an example of one of our unicorns, where a group of really sort of former tech employees, executives who made good money, pooled money and got in early on some of those and really helped them develop. So it's more than just money. It's really the expertise of working alongside these newer tech ventures. And then as those tech companies have been successful, we have Atlassian, we have Canva, we have others in this region. They have gone on to set up their own portfolios. So often those don't look like your more legacy, older money family offices. They are actually more like businesses. They're running them like businesses. Skip Capital is another example. Kim Jackson is the spouse of Atlassian founders. She comes from the same bank that I used to work for. She comes from the finance world. She's an investment professional, and she's professionalized the way her family is looking at it. So it's quite a different group. And then finally, I'd say the last group is the finance executives. And that's the group that I came out of, that generation of people who made money out of the finance industry, but also understand how deals work. And they love chasing a deal. They love working on a deal, and they're quite competitive about getting in on a good deal and finding a deal. And so, they're hunting, for the next transaction. And there's different approaches we can talk about in terms of accessing those kind of 4 different groups of offices, but they don't all look like what you might picture as a traditional old style family office. And that's just on this region. I can talk more about other regions as we go.
That's super helpful. And you've actually led us right into our next question, which I know for every entrepreneur that is on this call, the burning question is, how best can entrepreneurs learn about active family offices in your region? How do you suggest they go about finding family offices interested in their startups? And have you seen any entities emerge in your region to help aggravate and elevate awareness of family offices? Are there other ways that family offices can become better known to entrepreneurs in your region? Any insight you have on that, I know as an entrepreneur, would be greatly appreciated. It can sometimes seem like a black hole. I know I get that question from a lot of entrepreneurs at HBS. Let's start with Kimberly. Why don't we start with you, and we'll work backwards through the team this time?
Yeah. I guess some of what I might say, Elissar might pick up on, because some of my experience has been as a client as well, in terms of being invited to different fora to hear about some of these early ventures that I mentioned. Maybe 10 years ago, I was invited to a private roundtable through my private bank, which was showcasing something called Airtree Ventures, which was, again, some of these tech families starting to pool and invite others to get involved in creating a pool of funds for entrepreneurs. So because they understand that world, they were trying to create pooled funds, essentially. So that's maybe 10 years ago that some of that was going. And often it does still stay, people do rely heavily, I think, on their private banks. Particularly those that maybe don't have the time, or maybe they don't have a large family office. Maybe they're doing some on their own, or they're just actively interested in learning. So those are great platforms to go through the private banks, I would say. I'll stop there because maybe Elissar can pick up on some of that through her own experience with Citi.
Yeah, I mean, I kind of agree with you, Kim. I mean, if you don't know the ecosystem, let's say in the Middle East, and you expect to land and knock on somebody's door and say, hey, I have a great idea, at large, nobody's going to entertain your call. Because word of mouth is extremely important, and trusting the source that's going to refer you is also important. But to answer the question in terms of, how do you find how many family offices, or who are the family offices in the region? In places like the UAE and Saudi, you can assume that, I mean, if you just Google the wealthiest families, you can assume that each family has a family office. No one's doing their investments in an unprofessional way, so they all have teams looking after their investments. But accessing them is really would need to be through either referrals or organizations who can vouch for you, or other investors that can vouch for you. And at large, I would say, Stacey, family offices from the Middle East would not go invest in early startups. At large, they would like to see a VC backing up that idea before they consider, or a group of investors. So that's the way that, you know, they can assess, I would say, the risk and would be much more comfortable in terms of how they would look at the opportunities.
Interesting.
But the other way, maybe the more registered family offices, this information is actually available. So the IFC portal in ADGM, if these are registered family offices, the information is available. And then there's been a couple of interesting opportunities and unicorns that came out of the region where it was, you know, kind of the information is in the public space in terms of which investors back them up. And some of the VCs are actually, they are VCs in nature in terms of the structure, but they're really backed up by one or two families. And it's not difficult to know who they are. So word of mouth and recommendation is key in this part of the world.
I love it. I love it. And that's probably true for VC as well. So very similar dynamics at play there. Cristina and Sandra, any thoughts on LATAM?
Sure. So yeah, I think LATAM is pretty similar to what Kim and Elissar have shared on their own regions. Family offices tend to be very private, no, and also because of security reasons in the region, you know, they are not spreading the word around, you know, how much wealth they are willing to invest. They usually do it through third-party advisors or, you know, more institutionalized vehicles such as funds already in the market. But there are some more recent efforts to put together the data and consolidate some more information about the families in general. For example, UBS has launched several studies on family offices on the region, together with Latimpacto. Latimpacto is an association that is trying to gather together different type of buckets of money going into impact. And of course, one of them is the family office space. So they have recently released a study where they mention, you know, several cases of family offices and what are their alignment, their interests, their value propositions and their investment strategies. So there starts to be more public information around the topic. But I would say that the ideal way to get to that is either through a fund that it's backed up by a family or through referrals, definitely.
Excellent. Anything to add to that, Cristina?
And no, I agree with Sandra, because security is a big aspect of Latin America, and nobody really, it's going to be very difficult for entrepreneurs to reach out to family offices like you would in Europe or you would in the United States, which is a lot more open. So you do have to rely on advisors, wealth advisors. You have to rely on multifamily offices, other private equity funds or venture capital funds, or within your own organizations or groups that you may belong to as an entrepreneur. I think that there you get a lot of connections and you get a lot of input as well as referrals. Another aspect of it is that look for the areas of interest. So in Latin America, it's very difficult to go to events that are local, meaning there are some, but they're not that many. Most of the family office tend to go to larger events. So look, for instance, for impact, like Sandra was sharing. So if you have family offices that are very big, co-investing or investing in impact-related investments, then try to go to those organizations that are impact-related. If they're very focused on philanthropy, then go to those philanthropic organizations because they will have events and they will introduce you to other family offices. Next Gen, there are a lot of courses. There's one in Harvard that a lot of family offices Next Gen attend, and that's how they get to know a lot of people in their in that network or that ecosystem. Placement agents is a big aspect of our world. Like we would go as a wealth advisor to placement agents to see if they can provide to us investment ideas, and they may have an entrepreneur with a fantastic idea that they've already done a great due diligence on. And so that would be great for us if we find that there's something specific in a particular area that we like, that we would introduce them to family offices. So placement agents are a big aspect of it. And obviously your social network, it's important.
Amazing. Super helpful. Quick question just on stage. Are you seeing more stage agnostic decisions by family offices? Do they tend to be more seed Series A? Are you seeing an increase in growth capital in the region? Have you seen any shifts and changes in the stage at which family offices would engage? Elissar, maybe we start with you this time.
I don't want to say that there's been a shift as such, Stacey, but I think there's with some of the unicorns we've seen out of the region, I think there's been more awareness that, guess what, this could be super interesting to invest. Yes, we understand the risks behind it, etc. So they're a bit more open to consider. But again, I would say they would need to come in maybe as a group of investors together. But overall, they still follow a very kind of rigorous and diversified asset allocation. There are certain asset classes that they just love. One of them is real estate, for example.
Yes.
But I mean, they're more open to early stage. But I think I would say maybe growth capital still is their kind of preferred play.
A bit more comfortable once there's been some proven traction, once the idea has been proven, once there's a customer base, then putting in more growth capital. That makes a lot of sense. Yeah.
Correct.
Kimberly, any thoughts on your end?
I think it really depends. I mean, I'll go to that group of investors, maybe the finance professionals, for example, like they might come in very early. It's something they might get involved in personally, sitting on the board or helping to actually evolve the business idea. So you can have some that actually want that hands-on. And I've been involved in some of those with a group of former bankers, who understand certain asset classes or have the time to get involved in that. So that's very different, again, from maybe a more formal family office that's looking at something, more at the growth stage, more conservative. It really depends on, I guess I'm speaking to the entrepreneurs who are part of the group today and beyond watching this. It depends on who you are. And so really chatting through with your advisors, and I can't stress enough the value of networks. A lot of this stuff comes down to networks, to that trust that the other panelists have talked about by word of mouth. That's where most transactions still happen. And I'd add to that the power of brands like the Harvard Business School brand, like the University of Cambridge out of the UK that I chair, the Center for Global Equality, which is aggregating and trying to get these small ideas to a stage where they have readiness for investors. And often we forget that stage, and there is the opportunity to pool money for those smaller, early stage that really just need a little bit of money. And it's hard for larger family offices and institutions to line up against the small amounts, which is where something like 500 Startups came in with their model originally, which I've also invested in. So it does depend. And I would really like to encourage you to use those brands and those platforms and those networks that either exist or that need to exist. And that's where Stacey and I spent a lot of time talking about, what are the things that don't exist yet? Often you're not lining up against the money because the interface doesn't exist yet, if you're a small entrepreneur. And so we can talk about ways to create those spaces and pooled spaces to get those early stage companies the capital they need.
Yeah, and Sandra and I have talked about something similar too, Sandra, haven't we? Lots of great brainstorming. We'll I don't know, we'll bring everyone on that journey here today, but some really innovative. Maybe we'll do another session on some of those very alternative ways of thinking. Cristina, you talked a little bit in your first answer about the shift over the past 20 years or so into the private equity and the venture capital space and how you're seeing more leaning towards VC. So I'm assuming that is part of your answer on where things are trending in Latin America. But if you want to expand on that, we'd love to hear it.
Sure. I would add that one of the things that we have noticed in the last 7 years is that as more venture capital funds have become available for clients in Latin America to participate in, the availability of having, or the fact that some of these funds allow investors to co-invest in individual companies, that's how most of the family offices or clients that I know tend to take the risk when they decide to go directly into a company, because it's already been part of a fund, it's already been due diligence, it's already had a track record. And so that's where most of these families would tend to take a risk. And I would say that's more Series A in terms of the spectrum. Series B, perhaps, where they would go in. They would even try to I would say it's split across A and B, C, and then
Yes.
towards the end. I see a lot investing towards the end of the spectrum once the company is going to go IPO or it's going to be sold to a larger company. They would do seed investing if it's through their family members, through friends of their family members, if it is something that they have followed for some time and they want to, they want to give that initial seed money to someone they know very well. That comes, most of the seed investments I've noticed come through the next generation more so than through advisors and banks. Why? Because nobody wants to take that huge risk. It is really a huge risk when you invest in the first stage. You would perhaps do more due diligence. There's a lot more to research once you're in that follow-on stages. So that's what I have noticed personally in the last 7 to 10 years.
Yeah, and I just in my own personal experience have found that we closed an 18 million round of financing with a private equity partner, and then are pulling in family offices on the back end for the last sort of 5 to 7. And that's a beautiful model because there's already an anchor investor in that everybody is sort of piggybacking off of, but it's allowing us to do some really thoughtful work in pulling together family offices that allow us to expand into the regions that we're really serious about. So I couldn't agree with you more from the entrepreneur's perspective. Sandra, anything you would like to add to that?
Well, in general, I agree with what has been said. Maybe what I would say is that the family office ecosystem in LATAM is still very underdeveloped. I mean, you cannot generalize much because you see very different strategies in different markets. But I have seen a transition towards more alternative asset allocation versus real estate. That is a fact. And the other maybe characteristic is that I want to emphasize is the fact that younger generations are more taking decisions together with the family, and the younger generations have much more appetite for alternative investments and going more into the earlier stages of investment. So I think the trend is there. However, the allocation, if you see it in terms of absolute amounts, is still very low.
Yeah, that makes a ton of sense. So we've got 2 more questions before we're going to open it up, and only 5 minutes to do it. So if we could just be kind of quick and brief on these last 2, they should be relatively easy questions. The first one is, are you seeing family offices consolidating around any particular industries in your region, or does investing tend to be quite diverse? I mean, Elissar, you talked a little bit about real estate in the Middle East being an area where you're seeing some consolidation. Cristina, could we start with you on this question and what you're seeing in the LATAM region?
Well, a lot of it also depends on how wealth advisors and banks like to put all these trends out there. But I can tell you that I handle a lot Mexico and Colombia, and most of the investments that I have seen recently have been in digital transformation. That has been the most with the highest percentage in terms of opportunities that they find in startups or venture capital. The digital transformation for Latin America is incredibly important because not only are you participating in something that has great potential, but you're actually elevating or you're actually changing the socioeconomic aspects of the region. So a lot of families, because they're very impact driven, not all of them, but some of them are, tend to look at these opportunities as not only am I going to be profitable with this investment, but I'm also creating change. The second one that I have seen a lot, especially in Mexico and Colombia, is healthcare. Health tech opportunities are definitely there. I see a lot of venture capital and seed money going to healthcare. Automation or robotics is another one, obviously with artificial intelligence. That's an area that they have less expertise with, but that's of great interest. And then lastly, green tech. Everything that has to do with agri-tech, green tech, renewable energy, that seems to be of interest, especially for, as Sandra would probably mention, those families that are interested in impact.
Love it. Love it. Love it. Sandra?
Yeah, I will add education and employability tools, and of course, everything that has to do with EdTech, also of interest of families. And usually I mean the trend that I've seen is that families are investing more into the basic goods and services for general population. And I think this is a way of getting back to the society, giving back to the society because of the wealth that they have already been able to accumulate, to share that back, and then they start really trying to bring some impact into those spaces. So
yeah, I'm hearing impact on both of your answers. Kimberly, are you seeing the same thing in your region?
Yeah, I won't take up too much time because I think the answer would be very similar. Some of the automation technologies, impact technologies, zero waste, green, almost anything really, particularly that younger generation. I'm talking maybe 45 to 35, those investors. So some of those are next gen, some of those are self-made, but they have impact as their focus. They have the planet as their focus, and also, combined with the business opportunity, like hard-nosed business investment opportunities as well. So bringing those things together, and again, trying to help drive some of these markets as well. They see it as something that they can help develop, not just what do we get out of it, but how do we help push and grow some of these industries that we need for people and planet.
Yeah, very exciting. Very exciting. Elissar, anything you would like to add to real estate in the region?
No, I mean, not much to add. I think in terms of the trends globally, it's the same trends that are also looked up in the region. When I said real estate, it's just to say that there's a tendency. I mean, although real estate remains a very, very important asset class, but diversification is also there. So there's also that focus in terms of diversifying away from real estate, and not just real estate. But there are a couple of trends that are of focus in the region, and that has been covered. But education, investment in education, investment in medical services, digitization, and innovation. I mean, these are four at the forefront and focused of the governments, and similarly family offices are also focused on that. Investment in these in the region, as well as looking at opportunities outside the region that maybe they can then bring into the region. So there's always that thought process. If we invest internationally, can we bring that know-how into the region as well?
Yeah, I love it. Really thoughtful answer. Okay, so last question, which we're each going to need to spend all of about 20 seconds answering because we have so many great questions from the group. But what should entrepreneurs expect in their interactions with family offices? Any particular processes they tend to follow? If there's this very simple...
Honestly, if they don't like you, they'll tell you.
I love it. Simple, easy answer. Any other thoughts from panelists, or should we turn to some of the questions from the audience?
I think it gets picked up in the questions, but it's very difficult to cold call. I would not spend a lot of time sending out pitch decks to hundreds of offices. I mean, it's just not the way it works. They don't have the capacity to deal with the volume of requests. Often they'll have something on their website saying like even the ones that are public, that they don't accept unsolicited proposals. So I would focus more on finding those networks and those aggregators and creating those spaces that maybe don't exist yet, or events like this where you can get the word out and create spaces to pull them in, as opposed to trying to do a big push and broad sort of database type approach.
Yeah, I will maybe add that as a longer term strategy, we want to focus on the funds that are backed by family offices, and maybe in a later stage they will be reached out by the families if they have performed correctly in their portfolios. So it's a longer strategy, but I think that would probably make more sense than try to approach them directly.
I would just add, Stacey, for everyone to be mindful of the economic cycle that we find ourselves in. High interest rates have turned an interest into other types of investments, and therefore family offices may tend to allocate or reallocate some of those resources they had allocated to private equity. In fact, some of the reports that we've seen recently have shown that the top allocation to private equity was in 2021, and that has been dropping in Latin America particularly. So although venture capital has maintained itself the same, it's important to understand the perception of risk of some of these families, and also the cycles, the economic cycles that their countries find themselves in, and the global economy, because this determines a lot if they're ready to invest in venture capital, startups and so forth, in terms of how they allocate risk for the coming 3 to 5 years.
Terrific. Well, what thoughtful answers on all. Lori, I know you have been hawk-eyed on the questions that have come through. Do you have any particular questions that you have highlighted that we ought to take our last, unfortunately, 12 minutes to answer?
Sure. A lot of them are similar. It's really, how do you access family offices? Because it's a little overwhelming. One specific one that came in, and I don't know if this panel can speak to it, but accessing family offices in the US and Europe, can anyone on the panel speak to that, and whether it's similar to the other countries as well? Or we can skip to some other questions if you don't think that.
I can just speak briefly to that, because a lot of the family offices heretofore that have been a part of our portfolio at Olivela have come from either the US or from Europe. I will say, echoing both what Kimberly and Elissar said, that banks and private wealth managers are a really extraordinary way to go. We had, Morgan Stanley early on. To this day, I mean, they're sponsoring a panel that I'm doing next week. In fact, I think Cristina, you'll be there for it, and Sandra, I think you're going to be on it in Miami. But it really, it's been a great partnership and an amazing way for me to be able to access some of the family offices that we've worked with. And in fact, it was that path that led me to the private equity firm that just did this huge anchor investment in us. And we're now really trying to replicate a very similar strategy, kind of echoing what Elissar said about opening up into other regions of the world and being able to start at an early stage and kind of start small and then grow. It's very similar to what we're doing in both Latin America and in the Middle East. But I would say private wealth managers can be really, really great friends in this process. And it's worth spending and investing some time in building those relationships. It was huge for us as a business.
Excellent. Thank you. And then switching to just another question that I don't think was addressed, but are there any recommendations for how emerging venture capital funds can raise from family offices? Because we do see a lot of emerging fund managers trying to build up their funds. So that question came up a couple times.
Can you repeat the question, Lori? I'm sorry.
Sure. Do you have any recommendations for how emerging venture capital funds can raise from family offices? So not necessarily entrepreneurs looking to get funding, right?
We're looking for new LPs to be part of
Right.
it.
At least for Latin America, the best is really always to go through the wealth management firms. If you don't know them, then at least try to find the placement agents that are focused in that region. There are a lot of placement agents that are focused in Latin America. Electa is one of them here in the States that focuses in Latin America. And you really want to pitch to those companies, because they're the ones who are going to do the initial work and the initial due diligence. And they will introduce you directly to either private wealth management boutiques, or they will introduce you directly to family offices.
By the way, if anybody does have a really great specific name of a firm that they think would be good for that, if they could just write it in the notes section, I think it's a really great question. If there are placement agents that they think are particularly terrific, that would be great.
Thank you. And we do have a lot of questions that came through, and we'll try to get them answered after if we can't answer them online, just so everyone knows if you submitted a question. A lot of the questions were answered, but let's see.
Lori, could I pick up on one that I saw in the chat about
Please,
kind of the
please do.
spectrum of philanthropy and investment? Because I think this is very interesting, and also where some of these, particularly on the impact side, we need family offices to not just do the straight investment, but to de-risk, to allow an investment to get off the ground in the first place. And I recently hosted Graça Michelle here in Sydney, who is obviously famous in her own right, but she, through the Graça Michelle Trust, is setting up a fund to fund female entrepreneurs across the continent of Africa. And we met with some family offices to not only look at investing in the fund itself, but importantly, she needed de-risking capital to get that off the ground. And so that conversation and the willingness of kind of two sides of the family office to look at not just the straight investment, but to allow the investment to get off the ground in the first place, we really need a lot of times that sort of venture investing or venture philanthropy, to use that word, to allow these impact structures in particular to move. And we need some of these first movers to be successful so that others can come in behind. I mean, often that's the stumbling block, is to show proof of concept in a model, whether it be health or whatever it is, entrepreneurship. But that's a pooled fund as well. Like, she is accessing the global capital markets to fund female entrepreneurs in a diverse set of businesses across the continent. That's kind of my point about the example of pushing and helping these new models to come to the fore, particularly for the small entrepreneurs, small and large, that she's trying to aggregate through that fund.
Great, thank you. And I do open it up to the rest of the panel if you had seen any questions that you'd like to address. That's helpful identifying some of the things we haven't covered as well.
Sandra, it looks like there's one specifically for you about family offices' investment into the search fund asset class. I don't know if you have an answer to that one. It's from Antonio.
Let me look at it. I mean, search funds interest among family offices, would that be the question?
Antonio,
Yeah, sorry, Sandra. I looked at your LinkedIn and I saw we have a lot of common connections, and all of them in the search fund space. And that's why I was wondering, family offices investment into that asset class in Latin America, I think it's becoming very relevant. And I wanted to hear from you if you know of any particular family offices that have been specializing into this.
Yes, I have a couple in mind of family offices that are looking, because they have very clear their impact strategy or their value strategy in terms of where they want to put their money. For instance, one of the cases is education, other one is health, and so they do invest in a team as a search fund strategy. But I wouldn't say it's a general strategy at all. I would say it's very specific to those cases that I'm thinking about. But going back to I mean, in general, what I would say is either if you're an entrepreneur or a fund manager, look for the values of the family. Try to go to the events where you may find those families in there, and then engage through that. That may be the link to connect with this type of offices. Either they cannot do it directly, maybe they would do it through an investment vehicle, a fund manager. Maybe they do have a strategy for a search fund, but in general, what I would recommend is to look for alignment in terms of value proposition, big terms, strategically speaking, and then go into the specifics with them. That would be my recommendation.
I have, go ahead.
Oh, no, I know there were a few questions at the beginning about the networks or the organizations, and I had written down a few that maybe some of you would be interested. But in terms of some organizations, if you go to their websites and to their events, for instance, and many of you are philanthropic experts, but I know Synergos, Synergos is an organization. Giving Pledge, a lot of these are in Brazil, and they're trying to consolidate in the region other family offices. And then ICE in Brazil for impact. Sandra will probably have a lot more knowledge than me, but in impact, I know Tonic has a lot of events, TONIIC. The impact, which I work very closely with, the impact is they only work with family offices. Obviously, their focus is impact investments. But these are some of the organizations. So if they're presenting somewhere, if they are going to your university or any other areas where you tend to attend, I would say that definitely you want to do that. In terms of courses at Harvard, you have this great course where a lot of the next gen from family offices attend, which is the Harvard Impact investing for next gen at Harvard. That's where most of these next gen family members go to. So it's right there at your school. MIT also has one. The University of Zurich has another one focused on sustainability and sustainable finance. And there's obviously Family Office Exchange, which is a very well-known organization for most of us that are wealth managers. We tend to go to their events, and they specifically know family offices, because a lot of events for family offices, it is the CEO or the CFO that works for that family office that attend, which is good for you. But sometimes you want to go to those events where most of the family members will be there. So Family Office Exchange tends to have a pretty good outcome with family office members that I know. So I just wanted to throw some names out there for all of you to have some resources.
That's amazing. Go on ahead, Lori.
No, I think we've run out of time, unfortunately, because it's just about 1. So Stacey, do you want to have any final words?
I just want to say thanks to our incredible panel. I think you've just given all of us a lot to think of. I think you've really given us a broad view of the world, of industries, of stages, of process, of great resources. And I know each of you and how terrific you are, but I'm really glad that you were willing to share your expertise and experience with this great group from Harvard Business School. And thank you, Lori, for helping us put this together.
Well, and thank you, Stacey, and to our esteemed panelists as well. This was incredible. This is recorded. We will have this as a resource. We'll look at the follow-up questions too, to see maybe if we could answer some of them and get them out to our attendees as well. Thank you again for everyone who attended, and we'll stop the recording now.
Thanks
Lori.
everyone.
Thank you.
Thanks, Stacey. Thanks, Lori.